In this real estate news brief for multipliers right before the new year of 2021, stimulus help is now on the way. Mortgage rates hit a new record low and other news-making headlines. What's up, tribe, and happy early new year. We begin this real estate news brief for multipliers with economic news from the past few days. The Commerce Department issued an update on third quarter GDP, raising it slightly to an annualized rate of 33.4%. That's up from a previous 33.1%. Now, economists they're expecting a more normal growth rate for Q4, and they're anticipating a GDP of 3.5% and continued strength into Q1 of 2021 with the help of the COVID-8 package. Week to week report on unemployment. This is important as you look to invest your resources here in different markets here with real estate. Unemployment claims shows a drop in new applications, but there was still over 800,000 people filing. If you combine federal and you combine state unemployment programs, there were 1.72 million first-time filers and just over 20 million people that are unemployed. Now, when it comes to consumer spending and income, shows that consumers had less money to spend. Both figures were down in November because consumers cut back on the purchases of both goods and services, which isn't surprising. It's not surprising that consumer confidence and sentiment took a dip given where we are. Now, existing home sales, they were down mostly due to low inventory. National Association of Realtors reports a 2.5% dip to 6.9 million. They also reported that October sales were the highest in 15 years. So the market hasn't really cooled off that much. And because of the new COVID stimulus package, I'm expecting and thinking that the market, especially in Northern Virginia area, is going to continue on the incline. Anyone buying a home or refinancing a home can have a party right now because mortgage rates once again have hit another record low. Freddie Mac says the average 30-year fixed rate mortgage dropped 1 basis point to 2.6%. And the 15-year, we are on a race to below 2%. Could we get to 1% here before the end of January? Well, right now we're at 2.19%. It's craziness. Now, in other news making headlines, there's help for both renters and landlords in the new stimulus deal. The bill extends the federal moratorium on evictions by 1 month, but it also provides $25 billion in emergency rental assistance, which will help landlords that have been going for months without rent payments. Now, there are many that look at this as a Band-Aid wound to a massive cannonball shot wound, but reality is there is something there. What's the effect going to be? That is to be determined. One of the looming concerns, however, is that this large amount won't cover all the back rent owed to landlords, though. Market Watch reports that the National Low Income Housing establishes that renters will owe between 30 to 70 billion, not million, billion in back rent by the end of December. This, folks, was a brief real estate news update, but wanted to get it to you right before the new year. I hope you have a happy new year. And also, as always, thank you for watching. Until next video, I'll see you then. Take care.